Charles, it's he said to me, he's like the bomb squad. How did you put it?
Yeah, I come in after Magda pulls out. I hope I'm as effective.
The B team, you know. It's not true, although I do remember that you and Magda don't kind of sit around the same fire often.
No, it's. I think if I changed the paintings on her walls, I'd have a job in her office. But that's about all I could do for her.
I've known Charles for literally decades. We share a few passions. A passion for thoroughbreds. I long left that industry. You're very involved there. We won't talk about that today because otherwise, by the end of the hour, everyone will know a little bit more about horses. Sorry?
By the end of the hour, we'll be selling horses.
Well, no, that Mick Goss does, or he'd help us with that. But it's. I've also seen, though, more importantly, I've seen Charles follow his dream, which is to democratize investing in South Africa. Now, EasyEquities it's a phenomenon. It's a phenomenon. It's a big dream. And you've got to ask, why a guy from St. Stithians? Because in my perception, it's an expensive school where very privileged people go to, and they get trained for the global market where they can go off to England, America, wherever, be professionals, be executives. So why does a guy from St. Stithians end up not just staying, but being, as Kim van Ketz called it, pathologically passionate or pathologically patriotic about South Africa? Because that's, to a large degree, what you're doing is exactly that.
Look, Alec, I think I've traveled a lot, and I've considered the rest of the world. Every time I travel, I kind of ask myself, could I live here? And then I can't tell you how wonderful I feel when I arrive home. And it always feels like home. I always feel like Africa's in my DNA. And I've never felt welcome anywhere else. And so, if this is your home, then I think and you choose to stay, then you've also got to choose to make a difference and make a positive impact. So for me, I chose to stay, and because I'm staying, I want to make a really positive impact, and I want more people to stay. I just, in my heart and in my blood, as pale male as I am, I'm deeply African. My mother's generations, my mother arrived here in the 1820s. Well, my mother didn't, but her family arrived at 1820 settlers. My father's grandfather built the railway from Cape to Cairo, and he got off at Andola, which was northern Rhodesia in the time, a long time ago. And I was born somewhere between those two destinations, and I just feel deeply African. And I love it here. I can't tell you how many times I've considered leaving, and every time I consider it, the simple question is, do you feel at home anywhere else? And I don't. I feel at home right here.
And democratizing investing.
Yeah, it's so the passion started on the jammy stairs at UCT, and I'll never forget it. And the person is now deceased, but he was a very upwardly mobile student, always had lots of money around him. And he caught my attention. And what he was doing is he had a cell phone, which you can imagine. I was at university in 92, 93. Cell phone back then was quite a big deal. And he was buying and selling shares. And in those days, you had a 7-day settlement period. So he never had any money. He was just buying and selling within that period. And it fascinated me. And so it caught my attention. And so I sort of sidled up to him and said, well, I want to do this too. And I couldn't believe how difficult it was. To open a stockbroking account was impossible for a student. And then there was no online trading in those days, so you had to phone a broker and all those kind of things. So I just never did it. It was too difficult. And then the internet came around. I graduated in 94, 95, and traveled the world, and then came back to South Africa. And in 96, I was introduced to the internet. A good friend of mine was selling websites and building websites right at the start of the e-commerce boom. And he was insanely passionate about what he was doing. But for me, what connected those two stories was I felt that the internet could make investing easier for everyone, back then in 96. And I naively thought that the ecosystem was ready for this. And I really did feel that if you built these platforms back then, you would be able to democratize access.
But let's just pause there, because in 96 was the time that I had a newsletter. I just left ABSA. Went back into journalism, and my newsletter used to be faxed to more people than had email addresses.
Yeah.
So you're talking about very, very early stage of the internet.
Yeah, I mean, frankly, if that friend of mine hadn't been building websites, I'd never even heard of the internet. You know, not at university, they didn't teach it to us, and the programming that we learned had nothing to do with online or e-commerce or anything like it. But he was doing it, and it was really early. I mean, Amazon was founded around that time, and so was Google, I think 98 or whatever. But it's that naive desire or ambition to, back then, let's use the words democratize investing, and seeing the internet as the platform, the access platform through which we could do it, set me on a journey which has taken me now 22 years to the point where finally we're democratizing access. And you know, back then, if we go back to it, we kind of started our journey in 2000. It took me, I worked for a company for 4 years, and we built the platform, and it's still around today, GD247, part of the Purple Group. But reflecting on it, we were just really naive, and quite frankly, quite stupid. You know, if we had looked at the ecosystem, you know, no one had email addresses, no one had internet access, and if they did, it took you 5 minutes to access it. No one had bank accounts. You know, South Africans didn't have credit cards, and so how were you going to transact in this e-commerce world that we were building? And so we ended up just, you know, on a journey to build trading services for really sophisticated people. And that journey continued from 2000 to 2013, and in 2013, November 2013 board meeting, because our results come out at that time, I remember it very clearly. Two key board members, Ronnie Labner, who's the greatest man I've ever worked for, and Mark Barnes, who's been a big mentor in my life. I resigned at that board meeting, and Ronnie was very interested to understand why I wanted to resign. And I said, look, I've lost passion or purpose in what I'm doing. Like, I started this journey in 2000 wanting to democratize access, and I find myself building sophisticated trading systems for people that lose money, frankly. You know, 80% of people who go and trade the markets lose their money. And it didn't feel like something I could do forever. I'd run out of energy for it, and I thought, it's time for me to go. And Ronnie, he was just an incredible individual, and he just turned to me and he said, look, Charles, like, I completely get it, but you're going away on holiday, and you've got time to reflect on what you want to do. And he said, just give us one opportunity. If you find something that you want to do, give us the opportunity to invest in that. And it's amazing what that does for you. I'd never even thought about going on holiday and thinking on that and reflecting on what I wanted to do. And I ended up on a beach in Mozambique, and lots of you would have heard the story. And after a lot of beers and considering this in my mind, I said to the people that were surrounding me, my friends and family, I said to them, why is it that none of you have ever bought shares? You know, I've been a share salesman for a long time now. Either I'm really shit at it, and you know, or you don't want to do it. You know, what's the answer? And there was, my kids were around me, and my youngest was 7 at the time, and my oldest at the time then was 16, and lots of friends and family. My wife had been married to me tomorrow, 22 years. All of them said the same thing in different ways. Said, Charles, it's too complicated. We don't understand. We don't want to make you look stupid, and we don't want to look stupid. We feel excluded from the conversation. And for the first time in my life, I was listening to what my customers might have said to me if I'd asked them the same question. And my response was simply, okay, and if we make it easy, will you buy shares? And the response was overwhelmingly yes. Every single person that was surrounded me. And it was in that moment, I was like, well, we just got to make it easy. And that's where EasyEquities was born, sitting on that beach in Mozambique. And it was interesting because when I solved that kind of problem in my head, I reflected on why did I get involved in '96 and what was I trying to do? And it was this democratization, this passion, and this purpose, that we could get everyone to participate. And I'd finally worked out why we'd got it wrong for so long, is because we had made it look complex and sophisticated so that we could protect our jobs, so that we could charge ridiculous fees, so that we could keep it exclusive and to ourselves and sit in cigar-filled rooms and make ourselves rich. And actually our role was in enabling access so that we could create wealth fairly for everyone. And I came back and I shared a very naive concept, which was still in my head, about this making it easy. And it was amazing. And there were lots of people that I shared it with. But in every instance that I shared this concept with, it resonated so strongly with them that they almost got out of their seats and were like, when are you going to do this? And why haven't you done it? And when's it going to launch? And that happened consistently. And I'll never forget, it was the last person I shared it with was my CFO, who thinks very differently to me. And I sort of thought, well, if everyone else I've tested on kind of thinks like I do, but if he gets it. And he was like, Charles, we've got to do this. And so then I shared it with Ronnie Love, and I said, look, Ronnie, I've got this concept. It was called I Love Stocks. It wasn't called EasyEquities. I said, I've got this concept. It's called I Love Stocks. I'm going to democratize access to investing, and I need 2 million rand to build the business. And that's all I told him. And he sat there and he reflected. He said, it sounds like a great idea, Charles. He said, is there anything more you're going to tell us about? I said, no. He said, good. Go off and do it. And so I kept my job, and we went off and we started the journey to building EasyEquities in February 2014. And here we are 8 years later, and the highlights reel. 1.6 million customers, registered accounts, 800,000 active customers, average age 31-year-old, black South Africans, 42% female, 58% male. Now, when you contrast that back to what the ecosystem looked like in 2014, 55-year-old white men, and the biggest stockbroker in the country, Standard Bank, had purportedly 70,000 active accounts. And you look at what we've achieved in 8 years, and I get goosebumps kind of saying it out loud. Like, it's been an unbelievable journey, but we're just getting started. It's not democratization if you're only serving 800,000 people. It's democratization when every single person living in this country has got the ability to pick up a smartphone and invest in the companies and brands that they love and create wealth for themselves and the generations that follow. And so when you consider that, there are 55 million opportunities out there, and we've only reached 1.6 million of them. And I'm grateful for so many things, but one of the things that I'm really grateful is that other people have shared our journey and partnered us in our journey, and they've given us access to 60 or 70% now of South Africans. Capitec Bank, 16 million people gives us access, launched 2 years ago, and if you look at the run rate that they are, they'll recreate all of our success in 3 years, and we took 8 years to do it, just given access to their customers. We've got access through Bidvest Bank, which is a smaller opportunity, but still grateful for it. We've got access to Satrix, the biggest ETF issuer in this country. We're on their platform, and huge access to their branding and marketing. We will launch with Discovery this month in September, which I can't wait to do. I mean, I've never seen two brands look so good together. Like, to put EasyEquities next to the Discovery logo on the same page is incredible. I mean, for me, probably the most innovative business to come out of South Africa in the last 2-3 decades, and still today, I believe, the most innovative business in the country. And just to have our brand associated with them is incredible. And then in October, we'll launch with Telco, giving us access to a much broader market opportunity, 16 or 17 million people. And when you stack all of those partnerships up, this dream of democratization no longer feels like a dream. It starts to feel like a reality, and it's just we've laid down these rails, these partnership rails, and now our responsibility is to run down these rails and get these customers. And that's just our South African story. There's so much more to do, because what we've created is not just a South African story. It's, I said it when I was chatting to you last week, kind of feels like we've won the Curry Cup 8 years in a row. And if you consistently winning the Curry Cup, you need to raise the platform where you're going to go and play it. And so it's time for us to graduate. It's time for us to go and play the World Cup. Because pre-COVID, I presented or competed in 21 Fintech shows around the world. We won 17 of them against the best in category Fintechs today, the guys that have scaled all around the world. Guys like Robinhood competed there alongside us and beat us in one, and we beat them in another. But the bottom line is we've competed against the best in the world pre-COVID, and we beat them 17 times. And COVID locked us down for 2 years. We weren't capable of traveling. But in the result, it helped us scale our South African business. I mean, COVID was so good to us as a business, and so we focused here at home and built the business, and that momentum continues today. But the real opportunity for EasyEquities is that this desire to democratize is a need that is a global need. It doesn't matter where you look in the world. It doesn't matter. You can name any country, and less citizens in that country own shares in their stock exchanges. So the best in the world, and I hate to admit this, are the Aussies, and they beat us last weekend, and hopefully not tomorrow, or on Saturday. But 36% of Australians own shares on their respective stock exchanges, and they're the best in the world. So there's still a 64% market opportunity for the rest of their country that should own shares. So everywhere we look, the ability to make investing easy is an opportunity set for us. And I've spent this year predominantly on a plane. I think I've been overseas 3 months this year, which is showing. Sadly, I was listening to that health and fitness stuff and just terribly worried about the way I haven't done any of that stuff. But in the result, we've partnered globally, and I'd love to say more. I can't. We put an announcement out 2 weeks ago, but we've partnered with a best-in-class e-wallet provider in Southeast Asia. They're a multiple of Capitec in terms of access and size. They're a unicorn. They're incredible in terms of what they've done in their region. And we're launching, in fact, I've got the app on my phone. We've launched inside to their friends and family audience, which is about 10,000 customers. It's live, being tested now on the app. And it'll go live to their customer base in October, and I'll be back there, I think, the 17th of October to launch it officially to the whole market. And for us, that becomes our case study. It's not the qualifier to the World Cup. I guess it's the first round of the World Cup. Can we partner? Can we replicate what we've done here? Can we partner it globally? And can we win customers in a place that we don't understand as well as we understand back home? And I think by November, we would have answered that question. And what that unlocks for us is that suddenly, when you're playing on that global stage and there's a case study to be able to partner globally, there are lots of other opportunities that will come to us. I mean, this specific partner has got shareholders that have got access for us, partner access for us, that is just, it's unfathomable. And if we get it right, it unlocks the opportunity to go play in the next round of the World Cup. And so, this democratization desire is no longer just a South African desire, it's now a global desire. Where can we take the platform and the products? And it's what gets me out of bed every single day, and it doesn't feel like work anymore, which is, I think, that's what life and work should feel like. You shouldn't be able to separate the two. But I'm more passionate than I am today, and despite the fact that today I sold 7 million shares, or yesterday I sold 7 million shares.
Yeah, tell us about that.
Yeah,
It's
I
on
knew you'd get to it.
Sens, and here he is telling us what a great company he runs. I know there are going to be people running out here, as they did last time. Last time they bought your shares at 80 cents. Now they're going to have to pay like
R2, hopefully.
R2 for it. That's a year ago. So whoever did buy, and we put it in, it's in the BizNews portfolio, purple. But now you're selling shares. What's going on? What was that about?
I mean, and it's a good question. It's amazing how it's illegal for CEOs to sell shares. We're humans too, but the result, these shares, it's important to understand because I feel it's emotional for me to sell shares. Like I want to say that out loud. Like I don't want to sell shares. So I'm if you like, a forced seller. And the reason I am a forced seller is that my rewards package for when I created EasyEquities was 10 million options. And the share price back then was actually 70 cents, and it went down to 30 cents. So I got these shares at 75 cents, and 10 million of them is a lot, and they are 7-year options, and they expire. And so I had to exercise them now, otherwise I'd lose them. And you can imagine that in exercising 10 million shares, you need a lot of capital at 75 cents, 7.5 million rand just for the capital contribution, and then you have to pay tax at 45% rate, added another 5 million rand to the equation, and so 13 million rand later, I had to stump up to buy these shares, and I don't have 13 million rand sitting in my closet waiting, for a rainy day. And so what you do is you exercise the options, and then you sell the options so that you can fund the balance of the purchase. So in the result, in the last 12 months, I've actually exercised 12 million options, and I've sold 7 million shares. So I've retained 5 million of the shares. So I'm a net buyer of the shares is the important part. I've added 5 million shares to my portfolio in the last 12 months. If I could have found a way to finance and hold those shares, I would have. I tried. But there is a very fine balance, and I think some of the fund managers in here will get this, between a CEO being leveraged and over-leveraged, especially when it comes to a small cap stock, and especially in a recessionary environment where we've got lots of uncertainty. And so the risk kind of manager in me, which is not my default, was like, Charles, you just need to, you don't take too much debt through this.
Who did you sell the shares to? Because I guess it's quite a lot of shares for a small cap stock. And
very important. I placed them, every single one of them, with existing shareholders. So I went to all of our biggest existing shareholders and I explained to them why I was selling, and I said, look, I'd really appreciate it if you took these shares off me. And they were, of course, like it was without hesitation. So all of them took it up. And the CFO, Gary, had the same problem as I did. He had to sell 4 million. So in the result, we had to place 11 million shares, 22 million rand. We sold at R2.05. So that's a lot of money to go and place. And we placed every single one with existing shareholders, and all of them were supportive. And in fact, Paul Rutherford, who's in the announcement, wanted to say publicly that we support this. Like, we don't want management to be over-leveraged. We completely understand it. And the other thing about leverage is that it wears on you. It wears on your decision making. As a CEO, you've got to strike a balance, especially in a growth company, between growth initiatives that are good for the long-term share price and short-term initiatives that are good for the short-term share price. And if you're too leveraged into the own share price, it clouds that judgment. So for me, it's really good not to have too much leverage. I've got enough of it, and I still retain 29 or 30, I think 36 million, 36 million shares. So 7 million it's a substantial portion, but I still own 36 million shares. And more than that, the board, if people were watching the SENS announcements, the board and the shareholders signed off on a new incentive package for the executive team, which is to issue up to 15% of the shares over the next 7 years to retain talent within the organization for the next journey.
Okay, so anybody who's listening now to you and likes the story and wants to also participate in this going forward, they've had the explanation. But let's go back to Ronnie Lubner. Ronnie and we were much closer to Bertie Lubner, who was a dear friend of Jeanette's and mine. They were real special guys. These how did they get involved in GT24 in the first place? In other words, how did your relationship with him come along? They're both late now, so I hope you're not going to speak ill of the dead. But the point was, maybe enough hasn't been said about their contribution.
No, I mean, look, my journey with Purple Group, it was Purple Capital back then, was with Mark Barnes. So I met Mark as a result. I was the CEO of GT247 South Africa. We were a private company and we were for sale. And that was, everyone knew that. It was a $2 million startup and we were selling, I think, for 38 million euros or 36 million euros. And I was introduced to Mark, and Mark ended up enabling that transaction, and Purple Capital ended up buying GT247, which brought me into the Purple Capital group. And Mark and Ronnie were like brothers, if not father and son. They had an extraordinary relationship where they trusted each other explicitly. And by coming into the group, I was brought into that kind of family circle, and it really was a family circle. Okay, I've never seen anyone handle a board so well, but with so much empathy for how business unfolds. Like, he'd seen it all, and so in the good times and the bad times, he was always there. And we did the transaction in 2007, and Purple Capital bought the GT247 at the top, just pre-2008. And I was made CEO of GT247, the group. I'll never forget it, 27th of November, 2007. And on the 14th of February, 2008, we had to shut down every single one of our operating businesses, and we had businesses on 5 continents, and the only business we didn't shut down was South Africa. And Ronnie and Mark underwrote the rights issue that saved our South African business, which was at 30 cents at the time. They put in all of the capital. And it was through the GT that I came to know Ronnie, and I was fortunate to serve him all the way up until his death. And that's been his legacy has been replaced by his family. So the family are still investors, not quite to the extent that they were then, but they are still very substantial investors. I think they hold around 15% of Purple Group, and so they're still a lasting part of the Purple Group. And Ronnie I would give Ronnie a lot of credit, in fact, an incredible amount of credit for who I am as an individual and for Easy, because he could have easily accepted my resignation. I had done nothing. I mean, I was made CEO of Purple Group in 2010. The share price back then, I think, was kind of 18 cents, somewhere around there. And by the time, and when I was resigning, the share price was kind of 20 cents. I'd done nothing. And I'd had a very poor start. So it would have been easy for him just to accept it. But he saw something in me that I guess I didn't even see for myself. And that was his skill. He backed people. And that's what the relationship he had with Mark was 100% he backed Mark. And the relationship he ended up having with me is he backed me, and he's backed people like that. So extraordinary individual, and I just wish he was around, because he is a great enabler of great South African stories, whether it's in charity or in business. He played across both those fields. The whole family did, and they still do today. That legacy goes on.
Yeah, Gary, his eldest son, understands football really well as well.
Yeah,
you know who he supports. Not Liverpool, not
Arsenal.
West Ham United. Just moving on to Clive. Moving on to where to from here. Now you've been to Asia. We had a fantastic chat. If you haven't listen to that interview, do. Charles doesn't give, you didn't give it away. But I guess if you were to really unpack it, you'd have a feeling, and you've added a little bit more now, more clues, that this is like a big deal, the one that you're doing in Asia. You said that once you get that forward, you get to the next round of the World Cup. But where did it all start? Because there are lots of entrepreneurs, there are lots of people who wanted to democratize investing in South Africa. Mm. And yet you, the guys, you have managed to do it. What made you different? And if you can, looking back, where was the tipping point where you knew you actually were onto a winning thing?
Yeah, it's a great question, and I've been offered a lot of money to say, I'll give you R500 million and go and do it again. And my answer to them always is, I can't do it again. So there's no secret ingredients, but what I'll try to give you is the insight that I think created the tipping point. And the first part, 50% of what we got right, is 100% in the platform experience. The ease of use, the fractionalization of shares, the fact that there are no minimums, and all of those things, and the way the platform feels. I mean, it just feels great when you buy your first share for the first time. And that, I'd say, is 50% of our differentiation. But it's so repeatable and replicable. If you think about it, the first time I ever felt like that about anything was the first iPhone that I held in my hand. And then guess what? Every phone that came after felt like the iPhone. And so that technology is very repeatable, replicable. So it's not a lasting differentiator. But I'd 100% say that is 50% of our differentiator. And that pace of innovation and change continues today. We release 50 new releases of the platform a year. It's one every week except for over Christmas and New Year. So that has got a huge and lasting differentiation because we keep changing. And that's easy to replicate. Anyone here who's got 500 million can go and build the platform. The second part is where the real magic is, though. And this is the part that's much harder to describe. But the best analogy I can give is it's about our people. You called it a tribe, and I think that's a great analogy. But the tribe of EasyEquities is not just it's not the people that work there. In fact, the people that work there are just a small part of that. It's our entire community. It's our customers. It's our shareholders. It's the stories about Ronnie and Mark. It's our partners in Capitec and Discovery and Telco, and then it's also about our staff. And in that people DNA, there is a magic going on that is just like a witch's cauldron. When you're trying to create magic, you put lots of ingredients in. At some point, the pot starts to boil and magic happens. And it isn't the last ingredient you put in, and wasn't the first, but it's the combination of those people, diversity, their inputs and efforts and outputs, that you start to create this magic, which other people might call momentum. And when that magic happens, I think then you've got to protect the magic. And so you've got to be careful what ingredients you put in after that. And so we're very protective of who we partner now and who we bring in as people. They have to fit this magic culture that we've created. And that's the piece I can't replicate. If there was a secret ingredient to creating magic, we'd all do it. But that differentiation is our strongest attack weapon. It's the piece that when you touch EasyEquities for the first time, when you walk into our offices, I remember the JSC walked in, and some of the comments from their executive when they left, it's like, it just feels so good here. Like, what is it? It's not the paintings on the wall. It's that feeling that we've created in our communities that we touch, in the lives that we're changing, and the people that are part of our platform experience. That's the real magic. And there's no secret ingredients. I wish there were. It's just lots of diversity across the board.
Yeah, when I used to write CEO reports and chairman statements, I often would pull in stuff that I'd read in the year, and I recall using one quote every year that came from Warren Buffett, who said that what differentiates us, what creates a moat, is every day doing the little things that nobody notices. The phone only should ring twice at a Berkshire company. Not 3 times, not 5 times, not say, oh, he's on holiday. It's the little things that have expanded it. And when did you get that? When did you get that idea that if I'm going to build a business that's going to be have the kind of exponential, explosive growth that we've seen from you, that the moat needs to be built on a day-to-day basis. That cauldron, the ingredients that you put in there, are not necessarily a goat's head, but but it is maybe a little bit of spice every day. When did that come?
Yeah, it came out of that conversation, interestingly, on that beach in Mozambique, and the understanding that if you're going to build something that is disruptive, your customers have to fall in love with it. And if your customers are going to fall in love with anything, you better be listening. And they have very diverse needs and wants. And so we empowered our teams to listen to our customers. And so we don't make decisions sitting in boardrooms deciding what we think we should do. We listen to our customers, very actively engaged online, through surveys and other stuff. And then the team is empowered to enable those outputs. There's no decision-making framework that says, if a customer asks this, take it to the CEO, and the CEO that doesn't happen. If a customer asks for it, and there are 100 customers asking for the same thing, and there's one customer asking for something else, do the one that's asking 100 first, and then worry about the one that won. And that's what we do. We just listen, and we build, and we develop, and we add to this, diversity and this cauldron every single day based on our customer demands, wants, and needs. And that's led us to Easy Properties, led us to Easy Crypto. It'll lead us this year to Easy Credit. So we'll launch hopefully this year. I'm not sure it'll get live this year, but it's a securitized credit where you can lend up to 30% of your portfolio. When that's the deep understanding from our customers that they're using us as an emergency fund, and they take money out, and then that money returns to us. And in taking the money out and then returning, they're creating portfolio inefficiencies and tax events that we can help them prevent. So we're just going to lend them enough money so that they can use that emergency money, and then the money returns. So that's Easy Credit. And then Easy Life we'll launch this year as well, again, listening to our customer base, which is a life investment product built for our community. So sadly, if you're my age, we won't have a product for you in version 1. It's built for people under the age of 40, and our cohort group, it's really focusing on that 31-year-old and saying, what does a life product look like for this incredible customer base that are investing and saving and are upwardly mobile, and it's a very different product from anything we've seen in the market. So it really just is about listening to our customers. I do a big survey every year that I'm currently working on this year's one, and in that survey we try to really understand the needs and wants of our customers, and we get it, 1.6 million people receive it, we normally get about 150,000 respondents, and then we just prioritize based on what and we put things into 2 buckets, because we're listed, so we've got a capped listing tent, we're not a charity, but we put them into 2 buckets. We've got what we call momentum builders, and momentum builders are things that our customers desperately want that we might make no money on. And we say we've got to do those things because our customers need those things. And those are the momentum builders, and we call them momentum builders because what they do is they give us share of voice. People will shout loudly, oh my God, that's so cool that EasyEquities has done this for me. Cool, we get more customers. The other ones are what we call revenue builders. And those are products that our customers have got a high desire for, but fundamentally are going to change our income statement. And so those are, and what we say is, guys, we've got to do one of these at a time. So one each. And so in the case of Easy Credit and Easy Life, those are both revenue builders, but stacked up behind that, we've got Easy Ventures for next year, which our customers want, and it's not something we can monetize in the next 10 years. And we've got a whole lot of other products. So yeah, it's just about listening to our customers. And you asked the question, and it's worth answering it now. How do we see ourselves going from here? And growing the business, and I've talked about our global aspirations, but those are to win the World Cup. You've a couple of rounds you need to play in, and we haven't won the World Cup yet. We're not in the final, so we're a long way off from there. But if you think about it, the way we think about the business, we've got this incredible South African asset. That is, if these statements are true, and they're 31 years old, and 20 years from now they will inherit the wealth of South Africa. They will be the wealthiest customer cohort in South Africa. That's true. We've seen their behavior, we know where they work, we know what they're earning, we're tracking their growth in earnings and their growth in their portfolios. This is the future wealth of South Africa, and we own them. And so you think about what that's going to compound in terms of growth. So if we look backwards, we've been around 8 years, how's it compounded in the last 8 years? People that joined us 8 years ago are managing 10 times the money they are today. So in 8 years, they've 10x'd themselves, and so what do you think they're going to do over the next 8 years? They're going to 10x themselves. So as long as we keep them, we've got this incredible growth engine that says if we don't take a single customer from today, that customer cohort, which has now got 30 billion in assets roughly, are going to 10x themselves. So 10 years from now, or 8 years from now, we're going to have 300 billion on the platform. That's a fact. Nothing's going to stop us from that. And you just think about that. That's an unbelievable kind of annuity-based growth engine that I don't think anyone gets. There are a couple of analysts here, or asset managers, I was chatting to last night, who do get it, but I don't think the majority of the market gets it. We've got this, and there are two factors at play there. The first is the markets produce an average return of 12 to 15% a year. And that's our customers are invested in the market. So we've got that. The second thing is our customers are saving a paycheck and a half on average a year. So 8 to 12%. So if you take those two factors, you add them together, you get to close to 25%. There's this inherent growth rate of 25% without adding a single customer. And the doors aren't closed on customers. You know, we haven't even launched Discovery or Telco, and Capitec's just getting started, and. So that's our first growth engine, and that gives us the ability to think more broadly about what else can we do. You know, if we've got this bedded down, and quite frankly, we don't need Charles Savage to do this. Like, he's done his job, please. Let him go do something else. Get us get him out of our hair. And the next two opportunities where I focus my time is what other products and services can we deliver to this customer base that has fallen in love with us? And I use that word very respectfully. We gave our customers a survey. We said to them, if you chose a word to define your relationship between EasyEquities and yourself, what would you choose? Wow. And the most chosen word was love. Like, that is, it's amazing to create a brand in 8 years that people say, we love EasyEquities. So if you've got that trust, what other products and services can you deliver? And we see ourselves running on a 2-lane highway. The first lane is we have a responsibility to build products and services that create and enable wealth. And there's so many more things we can do there. You know, there are lots of products and services that will come in time. The appropriate thing is to understand what's the level of sophistication, and maturity of our customers, and therefore when do we introduce them. So let's not bring options trading in today, because that would destroy wealth. But at some point, we definitely need options, strategies to protect wealth, you know, in market downturns. So we've got I believe we've got a runway of 15 to 20 products. We've already agreed 10 of them over the next 3 years, and I think there'll be another 10 products, and I think we'll get there in 2 ways. 1, we'll build some of them ourselves. 2, we'll partner some of them. So we'll buy a fintech or partner someone and bring a new product on. And that creates a huge engine for growth, because every single line of revenue we bring on just adds to the profitability. It costs us nothing to reach this customer base. It's such an incredible advantage over anyone trying to compete with us. Like, we're going to launch a live product. We get access to 1.6 million customers, and we've got 800,000 of them active that we know integrally, and we don't spend a cent to market to that base. And we've got that advantage. And then and that excites me. And we've got wonderful products lined up. And the last engine for growth is the World Cup opportunity. When we look at where we are in the cycle, so in terms of kind of fintech and capital, we're at that dot-com bubble being burst. It feels just like 2000. You know, if you think about where fintech was just a year ago, everybody at a fintech business raised capital at crazy numbers, crazy multiples. We sadly never got to crazy multiples. But they got crazy multiples and they all raised money. And so there are lots of fintechs out there who've got a lot of money. They're very few, all right? I think you can count them on one hand, that are scaled and profitable. And let's say there are 10 of them that are scaled and profitable. We're one. And so at the other side of this recession, which I think is going to be a long recession, 2 to 3 years, there are going to be less of these fintechs running around because the capital's dried up, and they're not scaled, they're not profitable, they're going to go under. So at the other side of this, you're going to have less fintechs. So you're going to start to recognize the Amazons of the fintech world, the Googles, the Facebooks, the Microsofts and Apples. And we've booked our seat. We're profitable, we're scaled. And because we've booked our seat, and the desire to offer these products and services to customers is very high. Everywhere we go in the world, we find people that want to offer shares to their customers. And because we tick the box on scaled and profitable, and we have this defensible moat and this product and platform, people are saying, please partner us. And so the really exciting part of it is, where else can we do this? And how many markets can we get to in the next 3, 5, 7, 10 years?
These are very exciting big dreams. I've got 2 more questions, but in the meantime, could we just have hands up so we can get some microphones there? 2 questions. One you haven't touched on is low cost. Now, at BizNews over the past 4 to 5 weeks, courtesy of Sean Pesch's work, we are putting a laser beam onto costs in the financial services sector. Why is it that South Africa has ignored costs for so long, or has it? Has it just been maybe a generation that didn't need to bother to, or didn't bother too much about cost because inflation might have been high, etc.? Because it appears as though those 1.6 million customers who love you know something that those who are paying money to Alan Gray, Coronation 91 on balance funds and performance fees that they never look at aren't actually twigging onto.
Yeah, I think, look, I think the cost debate's been on for a long time, and I think where you've seen it play out is certainly in platforms like ours, but then also the passive industry. So the passives have championing lower costs, and well done to them, to all of them. They've played a really integral role at lowering the cost of asset management in the country. The asset managers have kind of got away with it for a long time. They charge, in my view, it's not quite extortion, but it's close. And so I share some of Sean's views. But the reason they've got away from it is it's obfuscated from the customer. The customer doesn't sit at the coalface of his income statement in investing. He doesn't. There's an intermediary. And in the result, what he says is, I made 11%, not I made 14% and paid away 4 or 5 or 3 or 2. They're just looking at the net result. So I made 11. And they're not focusing on, what's the difference. And then I think humans are very poor at computing the outcomes of small incremental savings. So if you take 1% saving for 30 years, it triples the outcome or quadruples the outcome. Pitt will tell us the answer, but it's a big number. And so really the cost debate tends to surface in low growth environments. So in a low growth environment, the cost debate is really healthy, and it's great that Sean has raised it. But the key is, the only certainty in increasing your performance in investing is lowering your costs. So the best thing that everyone can do in enabling wealth is to drive down costs, because none of us have got a magic ball to what the future holds. And so the best outcome for all of us is to keep pushing costs down. Now, there has to be a fair balance. Is it fair that Alan Gray charges 1.5% on an 80 billion rand fund? That essentially is a benchmark hugger. No. They should be charging passive. I don't think they do a better or worse job than the passives do. So it should be kind of passive. These are my opinions. But are there good asset managers out there, small, boutique asset managers that are creating alpha for their customers by picking stocks that are outside the benchmark huggers, outside the Aussie 40? Yes. And what should you pay them? I'm not sure. I don't have the right answer. But you have to pay them, because otherwise they're not going to get a bid to do it, and they'll just hug the benchmark if we pay them like passive. So there's a balancing act between these things, but cost is your only, as a retail investor, should be your laser focus to ensure that if you're paying high fees, you must make it commensurate with performance and make sure that your relative performance is real and fair, Sean's points. So, you can't benchmark yourself against inflation if you're a global equity fund. That's ridiculous. But fundamentally, the more you can drive your cost of ownership of investments down, the better your performance. It's just simple math. So costs, that debate's coming, and the asset manager won't escape it. And frankly, the asset management industry is the industry that is last in this fintech wave. If you think about asset management, it hasn't changed radically in over 100 years. Their time's coming. Everyone else has changed. Banking, in the investing, our services, payments, lending, everyone else has been forced to change their business models, lower costs, easier access. Asset managers, welcome to the game. It's your turn now. Like, they are going to the game is radically going to change over the next 10 years. And for me, the future of asset management looks nothing like the past. And I think Sean exposes some of the things that are going to change. Costs are going to come down. But I think there's a lot more to the debate.
Were you here this morning with Rob Hersov's presentation?
No, I was on a board meeting call, unfortunately.
He mentioned a cabinet. He had an alternate cabinet. And a member of the alternate cabinet was Mark Barnes. Do you think that's a good call, given Mark is a colourful character?
Yeah, look, Mark's got incredible experience and knowledge that comes from that experience, and he's great to have on any council. He's also passionate South African. So yeah, I think Mark's good with
Mark would make a good cabinet minister. Well done, Rob, on that call. Hands up for the first question. There we go. Rory. Anybody else? There's a question, and it looks like Nick from here in the back.
How's it, Charles?
How's it?
Good to see you. Alec, I'm making a disclaimer. I don't have a question, I have a comment. So if you want me to sit down and shut up until others have asked their questions, I will.
Okay. No, you got a little bit of leeway because
1
you're my
minute.
friend, so it's okay.
Thank you. So
No, I'm joking.
I'm here to pay tribute to Charles. The short story is we started a charity for widows and orphans of cops killed in the line of duty in 2018. Now, irrespective of what any of us think about the performance of our police service, it's not the fault of that little boy or girl if their mom or dad is killed at the hand of a violent criminal. It's a cycling-based initiative. We were still figuring it out when COVID hit us in 2020 and 21 and shut it down. So those families that we supported were going to lose some of the income all of the income that we were raising, some of the income that they depended on. One of EasyEquities employees heard about this, so because we had to pivot. And the way we did that was lockdown level 3 allowed 50 people to assemble outdoors. So we said to a Joel Stransky, a Butch James, get your 50 cycling mates and host a ride, and we will charge a fee and pay that money to those families. So Charles pitched up there with 7 or 8 of EasyEquities employees, Alec, and went way above and beyond the the fee that we charged. So I'm here to testify that oak puts his money where his mouth is, and he gets the importance, because I do it because Madiba told us we must do that. Look after those that are less fortunate. So I'm saying to Charles, thank you. He is a man that gets it and puts his money where his mouth is. So I'm going to sit down now. Thank you.
Thanks. I just want to pick up on that because it's...
Just wait for the applause. And that wasn't a comment. That was a story. And I love stories. So thank you. Thank you.
And thanks. And we did such a small thing there that it doesn't warrant that kind of... but thank you. But let me tell you what we do on the platform, which is part of our DNA, that also does escapes kind of review, is when you buy a share, there's the ability to donate for good on the platform. And so every time you trade or to buy or sell a share, you can donate. And we raise, I think we're over 2 million rand now, and we launched it 2 years ago in COVID to solve some of these problems for lots of charities. And we change the charity every month, and the charities, we've done everything from horse care to childs and orphans and everything. And it's such a wonderful part of the ecosystem. Our community, it's not us. All we did is we're just enabling it. But our community, every time they buy a share, they'll drop a rand in, or 5 rand, or 10 rand, whatever's affordable to them. And it's a huge part of being a platform and a business that is passionate about community. You have to allow everyone to give back. So yeah, thanks for that. I didn't deserve it, but our community does.
There's so much, and as an entrepreneur myself, that I'm listening to you and I'm thinking, make a note of that, make a note of this. I'm certainly going to be watching this video again, but that's a good one as well. Nick?
Hi, Charles. Nick Sproul here. I'm just interested in terms of your expansion. Congratulations, obviously, on the Asian deal. Are you expanding in terms of a strategy, are you expanding under the EasyEquities brand, or is it under a different brand, and are you kind of being coerced into white labeling yourselves, or how do you see that playing out going forward?
No, great question, Nick. I mean, wherever possible, we want to use the EasyEquities brand. That's not always possible, but in this partnership, it's both brands living together, which we think is the best outcome. We think for us, partnerships 1 and 1 equals 22, and in that, both partners have to feel welcome to the partnership. They both need to be announced, and so for us, we're going to work really hard to ensure we're never just a white label, because you can't replicate that people DNA. So in a lot of really early when we partnered, let's take a Capitec. If Capitec had said to us, we're just going to call it Capitec Invest, and we don't want EasyEquities there, we would have said yes. It was our first big partnership. Today, we won't say yes to that, because we do think the people part is important. So in a perfect example, discoveries like this, telecoms like this Asian partners like this, it's EasyEquities plus the partner, and the two together must work well. And so they stand together. So partnership will always, there'll be bring the two partners together through the brand. We want to, in some places, what's the benefit of running your own brand in a market is that we're braver with our brand than others. So we will do things that our competitors won't. I mean, if you've watched us in social media and anything, there are times when my marketing team do stuff and I'm like, okay, maybe I just need to sit a little bit forward and watch this closely. And so we do that kind of stuff, and you can't do that with other people's brands. And so we will definitely be in market in these regions. We will launch our own brand. just so that we can test stuff to see if we take a different approach, we can get different results. So it's exactly replicating the South African story. Partner our brands with other brands that work well together, have a common shared purpose, and then 2 is be experimental with our own brand, push the boundaries, and see if we can do things differently in that market that then creates different outcomes.
It's quite interesting when you look at who your partners are. Discovery, I know lots of people here don't like Discovery. I love Discovery. I think they're amazing.
What a business.
Capitec, same thing. It's Jet and I, we love Capitec. We think that they're incredible. So it's almost like you partnering with brands that their clients also love.
Yeah.
Is that how do you find that? How do you, because there can't be,
They
I
find
mean, many
us.
brands I don't love.
I mean, it sounds so ridiculous. I mean, now the Capitec story, it was December, where are we, 2018. So I was literally, I'm in the last week of work, and Francois, who's the head of innovation there, he phones me, and I never met him. He says, Charles, I'm a EasyEquities customer. I love your platform. I'm the head of innovation at Capitec, and I know you're going away on holiday soon. I just want to ask you, we're launching an ecosystem of partners inside the banking app. We'd like EasyEquities to be first. Are you open to that? And I was like, is this a joke? Who's Francois? And well, how would you phone me? Like I should be phoning you. And he's like, no, this is serious. But I just wanted to get it because in end of January next year, we want to have a Bosbarat, and we want to talk to you about this seriously. And I just want to book your time now, knowing you're going away. And I said to him, you just ruined my holiday. Like, what do you think I'm going to think about for the next 6 weeks? It's like, how am I going to partner for Capitec? What does it mean? What is it going to do for us? But that's how it happened. And then Discovery is similar. So Discovery did an RFP for investing when they launched, just pre-launching the bank, about a year before they're launching the bank. And we lost. Somebody else won. I don't know who. But they never delivered. I don't know what happened. And then Hilton took over as CEO. And he phoned me. And he said, Charles, I don't know if you know me, I'm Hilton, and I'm CEO of the bank, and I really want to apologize for what we took you through on the last round and say we want to partner you. And so you get to write the rules this time. And I was like, this is Discovery Bank phoning me. So they phoned us. And the same can be said of Telkom. Telkom phoned us. And it's not arrogant. It's just that we're running fast at what we're doing. And so we're not thinking about where all these partnership opportunities, but we are saying, hey, we're here to partner. And so the phones are ringing. I mean, we are now very protective. Like, there are brands that we will not touch because they don't share our culture, our passion, and our purpose.
Talk to me about Telkom, because that's a brand that not many people do like. Helcom?
Yeah, it's an interesting one. You say that. So Telkom have got a really great brand study. They've got the highest love out of the telcos. They're the most trusted of the telcos. So
what?
And they call themselves the...
Did they commission that
Yeah,
study?
they did the survey. But I tell you what's interesting about them is they've got the highest access to SMEs in the country. So Telkom services the SME market extensively. So what we love about the partnership is that it takes us into that SME audience that we're not necessarily getting to. And we've got a business called Rise, which is is a pension fund administration business that really focuses on enabling SMEs to enable investing for their staff. So Telkom takes us to that SME base. We love Sipho, who did the deal, no longer there. He's mad. He's passionate, mad in a nice way, passionate about financial service and financial inclusion. We'll see if the new leadership shares that passion, but we're still on the rails and we're going live. And I think Telkom's got a very strong role to play in getting us to a market that we can't get to. They get to communities. There's a Telkom kind of everywhere. So it's about they share common purpose, and they get us to communities we can't reach.
Do you think Paul Harris has got a chance of doing that deal, Rain and Telkom, that merger?
Look, I mean, if anyone has, Paul has, and Michael's invested there, and others. It's an incredible team, Rain. So you're not just acquiring a good business; you're acquiring an incredible team. And so, I think Telkom's got to think very seriously about it. I don't see how MTN and Telkom create a better outcome. I just think that's just mixing the same ingredients and expecting.
But it's an interesting point that you've now shared with us. It kind of gives us a better understanding of why Michael Jordan and Paul Harris would see Telkom as a good partner. You've been in there, and often the facade is not the same as behind.
Yeah, I think Telkom. I'm a Telkom customer, by the way, not an MTN or Vodacom, and they've got the best data package in the country by far. They've got the lowest cost access to data in South Africa. If anyone's going to democratize access to cheap data, it's going to be Telkom. They've got an unfair advantage, which is fine. That's how it started. And so if you think about what Rain's trying to do, get access really cheaply, there's a shared passion and purpose there. So I think it's a perfect marriage. And if anyone's going to pull it off, that team will. And in the result, you're not mixing the same ingredients expecting a different outcome. They're very different teams and capabilities and understandings. And Rain's been built recently from the best technology and the best science and data, etc. So I think it's a great deal for Telkom and for Rain, and hopefully that creates a good marriage for them. I don't think MTN and Telkom coming together creates anything different. And in fact, we need more competition. I mean, the one thing in Southeast Asia, which was worth sharing, so why is it such an exciting market? Average age, 27, so they're young, and our platform appeals to young people. 2, everyone's got a smartphone. Everyone, not every, no distinct, everyone has a smartphone. 3, 2 rand a gig. 2 rand a gig.
What do we pay here?
I don't know, a lot. Like, what do we pay here? Probably 20 rand a gig, 10 times that, I'd say. Yeah, 20 rand a gig, probably, on average. 2 rand a gig. So there's no friction in accessing my platform. Then at the end of that, you put this e-wallet provider, which says, we've got all the money. All money happens along our e-wallet. So there's no friction in me offering shares. 27, I'm young, I'm upwardly mobile, I'm digitally savvy, I've got access to data, I've got a smartphone, and my money's right next to you. So the ecosystem is so strong there. And the thing that I came away from Southeast Asia is, what's the problem here? Data. Why is it not 2 rand a gig? The telcos need to come to the market. Government needs to step in, frankly, and say, hey guys, if we're going to enable growth in this country, everyone needs fair, cheap access. It's fine, because I can afford Rain, I get 1,000 rand unlimited. But what about someone sitting in a township? I can't afford Rain. How do I get my free unlimited access at a cheap price? And we need 2 rand a gig. If we're going to grow the economy, I'd start by mandating that you put telcos to test in the townships and give South Africans 2 rand a gig, so that everyone can participate in this economy. Because the future of all services is digital. There isn't a single service that I can think about that isn't going to be delivered in a digital way. And if we don't enable that free access, we're not going to enable business models like mine. So I've got a selfish interest, but we're certainly not going to deliver medical health. We're not going to deliver a whole lot of stuff. So the telcos need to come to the party. And I think Rain and Telkom give us a hint and a hope that actually, if those two things come together, we might see a big war on data. Because I know that people like Michael and Paul are passionate about getting data to people at a low cost.
Passionate South Africans as well, as are you. Charles Savage, thank you.